I'll just go through a few of the macro things on the grain markets. Obviously, we know where we're at. Price-wise, what we've seen here this year has been much better than we had the last couple of years. So, big change in a short while, and we'll go through that for just a little bit quickly. So that's the question we always get for our farm marketing groups, and the guys, where price is going to be. What do you think is going to happen with the price? Should I sell now? Should I hold? That type of thing. I won't be able to tell you that for sure, but I can kind of give you some overview of some of the things that could affect that, obviously. This here is a chart from year to it's changed a little bit. We do have the markets off a little bit today after yesterday's report, but this is from the beginning of the year where relative performance on each commodity. And as you can see, gasoline has had, and energies have gone up the most, but we do have corn and soybeans have been up about 6% on beans, and corn's been up 12.5% since the beginning of the year as a commodity. We're getting close to the near the end where you have to be signed up for your crop insurance. Those prices are determined as far as the coverage level in February, and then again in October as far as the average price, and whichever one's higher is the one that we'll use for that. You guys are all familiar with that. But we did see a pretty good increase in our crop insurance prices from what we had last year for sure. Corn came in at $4.58, and soybeans came in at $11.87. So, I know crop insurance prices are higher this year because of the volatility and because of the higher crop prices. But remember, you're insuring a higher priced commodity, so that investment is still a very wise investment, I believe, personally. This is another chart to see where it has been. It's a 7-year high on the corn and an 8-year high on the beans as far as the insurance. And if you have any cotton, that's up as well. That was on the chart that I stole. So. Ethanol, that's another big wild card right now. Obviously, we've had less gasoline usage due to the pandemic over the last 12 months. We saw a lot of ethanol plants idle. We're seeing some news now where ADM is going to start up a few of their ethanol plants in Iowa, some bigger ones again, and some other ethanol plants coming back up online due to ethanol margins finally starting to come around and maybe the economy kicking back in and whatnot. So prices of fuel have gone up, ethanol has gone up. Obviously, that's the margin. This here is how much corn we use for ethanol. You can kind of see the big effect of the pandemic last year. April was way down here. This is the gray bar is the record for the month, and the red line is this year so far, and the blue line is last year. So we've been behind last year all the way through. Now we'll probably be ahead as we go forward as we get into the comparing month over month this year. This is just another chart showing corn use for ethanol and ethanol yield. We get about 2.9 gallons per bushel of corn. We had, as you can see, the same thing there. You can see where this is by month, where we were way down last April, and we've kind of building back, and we're not where we were before the pandemic. And we might not get there, at least not for a while, because ethanol is a pretty mature market, and the economics of some of these plants, the least efficient ones, are going to have a difficulty time starting to ramp back up. There's a wild card in that, though, and that is exports. Our exports have been really good. There was just an announcement this last week of 2 more cargo ships going to China. So they're not maybe importing corn or as much corn sales to them as recently here, but they have some ethanol and other products they're bringing in to, which will help shore up their supplies of their domestic corn in their country by bringing in that ethanol. So that's kind of good news for the ethanol business and maybe for the corn prices long term. Soybean usage. Soybean crush, we talked about the exports. We've had a really lot of exports, but soybean crush is another big thing to look at. And we have records on soybean crush for the last 6 months in a row. And we'll have, I think it'll continue. A couple of reasons for that. Big demand for oil, soybean oil. So lots of demand for bean meal. Bean meal exports are up. But also because we've added more capacity in the U.S. due to expected exports in the last half a dozen years. There's been a couple new plants in the Dakotas, a new one in Michigan that came online this last year. And so those plants are operating at capacity and increasing the soybean crush. So that takes away more supplies domestically from our supply here in the U.S. This is corn exports, weekly exports every week. They come out with a export millions of bushels that actually get shipped. And this Monday, I guess it would have been, we had 60.8 million bushels of corn exported for the week, and we need 53.8 per week to average our for the rest of the year, to the end of the market, end of August, to get us to where we need to be for the marketing year. So we're on track to meet the USDA numbers, or maybe not above that. This is total commitments, though, as far as sales. That first one was how much is actually shipped. This is actual sales for the year. We're at 90% of what we expect to sell for the whole year already sold. Now, it's not all shipped, but for the marketing year, we're already 90%. As you can see, that's way above what we normally are for this time of year. This is last year. We didn't have our anything going on, only 30%. We ended up being lower than expectations, but any of these years, this is the highest we've been as far as the actual sales. And the biggest difference there is China. They come in and bought a lot of corn, and they weren't in there in the past. This is the inspection report just showing once again where we're well above, the red line is this year, well above the 5-year average and well above last year for sure on corn exports. That's the biggest driver in our prices. You know, we had this, the ratio in Iowa that started it, took those bushels away, but since then it's been demand driven on the export side. Soybean exports the same thing, although as you can see, we're dropping off here. Didn't have this last week, we would have been a little bit higher again. But as you can see, we get to this time of year, exports and soybeans in particular, but all exports will switch to South America. So our export inspections will start to decline. We've had a really big, robust program. Got a little delayed with this cold weather we've had a month ago or a few weeks ago. We got really frozen at the river, slowed it down, but otherwise our export on beans is getting about where it's going to be for this marketing year. And then as you can see, towards the end of the calendar year, we'll pick up again when our new crop supplies become available. Other big thing that makes the markets is the funds and the investments, speculators. This is managed money. It's just a chart to show where it is. This is net long of soybean futures and options. And we're long, this is 2020-21, so we have a pretty sizable position compared to some of these other years when we've had higher prices. So are they going to really buy a lot more from here? Maybe not at this point without another issue, but they are holding a pretty sizable long position. This is corn. Corn's even more so that way. They did have some sell-off yesterday, and again this morning and today we're selling some of these positions, but haven't changed the trend yet. But we see the speculators and the money coming out of the market just a little bit after yesterday's USDA report. Acres. How much are we going to plant here and starting here pretty soon? Estimates are over 90 million acres of corn, 94 million up as high as that, 95. But if we do that, we can't get our 90 million acres of beans we need. Combined, we should have over 90 million acres of both. It's kind of an acreage battle thing to look at here because we need a lot. Our bean stocks are really tight. We'll get into that. And then our corn inventory is getting lower. We need acres of both. We can't have as much prevent plant and those types of things this year in the U.S. as we do. It definitely would be supportive to prices. What's the weather going to do? This is a groundwater map. There's some concerns about drought, although I know we have some rain forecast here this week that'll help us with that. Obviously no drought down here, but in Illinois and Indiana, Ohio, they've been kind of dry, and of course western Iowa has been in the news for quite a while. It's always a drought over here, so there's no corn there. This is a drought monitor as of the 2nd. As you can see, we have a start of a drought right in our main area here, but there's nobody that's really excessively wet. Other than down in the south here. Western United States is really dry. Like I said, there's a good rain forecast system coming through that should help the plains and help us. This is a year ago, so you can see this year, same time, last year, same time. Last year we didn't have, as you know, it was pretty wet in the spring in some cases, so we didn't have a drought issue. Looking forward, we talked about the nice weather we've had the last few days. Next week, 6 to 10 days, valid next week, it's going to be below normal temperatures, at least that's today. It'll change by this afternoon probably on the forecast, but each day they come out with a 6 to 10 day and an 8 to 14 day forecast. And then on the precipitation probability, looks like once the system goes through, that we'll get some drier weather again that maybe follow. So we'll see if we can get in the field early or not. Other big weather, obviously, South America. 2 crops, North America, South America. Brazil's been wet here as they're trying to harvest, and they've had difficulty getting their beans harvested. I saw some pictures of beans that are sprouting in the field in the pods. It's not everywhere, obviously, but you see those type of things. And with the situation we are in a world supply, we don't want reductions. And then Argentina's been dry. So maybe look at their crop getting a little bit smaller, even though the USDA didn't change the numbers yesterday, much of the South American crop. South America, if you talk to those agriculture reporting services from there, they are lowering their crop just a bit. This is talk about the slowing of harvest. This is corn harvest in Mato Grosso. This is the first corn crop. They're getting about done. They're 91% harvested, or excuse me, they're 67% harvested in some of those areas. That's normally up around 91. And this is corn production. They are, even though they're going to trim this a little bit, as you can see, this is their first season corn, is the yellow. Their biggest crop is the second season corn. The reason why I bring that up on there is this later bean harvest in some of these parts of Brazil is affecting corn planting. And so they can't plant the corn until they get their beans harvested in some of those areas, and it's getting late. Their ideal planting time is by the end of February, maybe the first couple of days of March. So we're getting a couple of weeks late now on their ideal yield. And for them, their growing season is probably not going to end. They won't get a frost possibly, like we'll have a concern when we get rain. But it's more of, we'll be pollinating in the hottest part of the year and the driest part of the year. Their rain will slow down in the winter when they get to there, it's dry, and that can affect their yield. So interesting that with this delayed planting, the USDA did not change the yield yet, as the report yesterday. I think they might have to if this continues, and even what's already happened. And in the reports to come, the USDA might reduce those yields just a little bit. This is major oil seeds, all the oil seeds totals in the world, and as you can see, our stocks to use ratio is down around that 11%. That's the lowest it's been since 2011, 12 in that range, 13 since the drought. So definitely that's why the markets are up. Really quick, we'll go over the supply and demand a little bit with the USDA report yesterday. They didn't change anything. They changed soybean seed usage by 1 million bushel, reduced crush by 1 million, or domestic stuff by 1 million. But basically, all the ending stocks from the U.S. were left unchanged. So they didn't really need to even have a report yesterday. They could have just said, look at last month. It's typical for March not to have a lot of changes, but with everything going on with the exports and whatnot, we thought maybe there would be, a lot of people thought maybe there would be a little bit of a reduction in carryout. And that's, I think, it didn't happen yesterday in the reaction, but today we're seeing that, a little bit of that fun money coming out in the market trading. Just before I came on here, I think beans were down 25 and corn was down 14. So this is another chart of just of the report. You can see the changes are zero basically. I mean, they had a little bit here in feed residual, but they made it back up in food and ethanol. So the net change was zero. Left the farm price, it's over here. I mean, left the farm price the same at $4.30 a bushel for average farm price. Other thing about this chart up is you can see even with if we have 93 million acres, this is R.J. O'Brien's, one of the brokerage firms we work with, their estimates, even with 93 million acres and a good yield of 178, which would be an all-time record, we still only have a carryout of about 1.5 billion this next year for 2021-22. So this might not be a one-year thing. I mean, obviously we can get even better yield and plant even more acres, but we're looking for good demand to continue to stay for more than 1 year here. This is, I know they're going to talk about this later in the presentation, but this is seasonals for corn. I just wanted to show you what it's kind of not the same as it used to be because this has got now the renewable fuel standard in ethanol, and that's changed these seasonalities. But still, you have one time to sell here by the end of March. You'll see the market kind of start to decline, and then by the end of June, still in corn, that's kind of the best time to have your forward contracts in your grain marketed. After that, it kind of goes down on the seasonal scale. Soybeans, real quick, same thing, no changes, basically nothing. That's where they had that 1 million in seed and less in residual, so basically no changes in soybeans. Once again, people are looking for a little bit less carryout. Can't do a whole lot because their carryout's at 120 million. And I would say somewhere around that 100 to 110 million is the lowest it can go. That's all that can be left in the pipeline. Same thing here, with 90 million acres of beans and we get 51 bushel yield, which is going to be close to a record. We did have a little better a few years back, but even with that, we're only taking a carryout from 120 to 154 as far as estimated. So still a 3.4% carryout to use ratio, and you can go all the way back. Other than in 2014, 15, and around there hasn't been too many. We're still going to be very tight on beans, is what I'm trying to say. So I think it's more than a 1 year thing. Doesn't say we have to go a lot higher from here, but we should have well-supported prices for more than 1 year. Seasonals on beans are not near as easy to come up with. They're a little bit later though. You look at July and then end of June, July, same thing. You'll see where it starts to drop, but the marketing beans is a little bit later in the season as far as the season's generally. That's partly because of the demand side coming in year round. We have two crops. Wheat doesn't matter, just put that in there. They didn't change wheat either. So, but one thing on the wheat you look at, we talked about supply and demand, or carryout use ratio on corn we're at 10%, and beans were at 3%, but wheat were 37 to 35%. We're trying to get it down low enough where it's reasonable because it's been pretty high, 50% plus for several years. And how we've been doing that is we just haven't planned it. The U.S. really is not competitive in the main wheats, hard wheat, soft wheat in the world market. Some of our specialty wheats, yes, we use that domestically. But on the wheat side of things, there's lots of places to get wheat in the world. Everybody grows wheat. So we're going to concentrate on corn and beans. This is just a chart showing corn, how it tracked in 2008. It's kind of similar. I mean, maybe we're in this blip right here, right now, where we're going down, but it bounced back up and traded over that year. It's really close, as you can see. So if it stays on that trend, we traded over $6 into this planting season that year. So we'll have to see how planting goes. But if we get any flips in there, I'm not necessarily predicting this, but I think $6 is definitely not that far away. It's not out of the question on the board. And this is soybeans in other tight years, other tight carryout years like this. And this is where we're tracking so far. As you can see, other years where the carryout use ratio is actually even higher than we are now. We had prices much higher. This is 2012 in the drought, where we got way up in the upper teens there. But even if you look at the year after 13, 11, we are still higher. This is November beans now, not the cash beans. But we're still higher than we are now. So I wouldn't rule out a $13 and $14 November bean price if we get any type of issue with planting at all this year. I'm saying that if they hold out for that, maybe put some floor protection in, we'll talk about that, but definitely potential for higher prices in beans than we are today based on historical. China, I just threw this in here because I was at a presentation that we did internally at Premier a couple weeks ago. We talked about China and their big influence and their hog herd. They had that African swine fever. They decimated the herd. It was going to take 3 years for them to get back. Well, here it's about a year and a half later, and they're almost getting back to levels where they're at. And as you can see, this is the number of million head that China has, 310 million, US 78 million. So quite a bit larger than anybody else in the world. They like to eat pork over there. There's a lot of people to feed. Thus, lots of corn to buy and beef. And how did they grow their herd? It wasn't necessarily internally, but they have increased what they imported was live swine, and that's all breeding stock, sows and boars to get their hog herd up. So just one reason that is huge feed consumption is the reason why it's driving their big demand for corn. Then, of course, we all know the one last thing that's affecting our markets and affecting everybody's lives, not in a good way. Hopefully, we're getting through the end of this as we move forward here, but it's the coronavirus pandemic. A year ago, we had a meeting and we were talking about, this maybe won't last that long. Obviously, that was wrong for sure. But hopefully, now that we got the vaccines out there and we get things going, that we can get through that and we don't have to talk about it anymore.